Good afternoon, everybody. How are you? My name is Michael Lydick. I am the big kahuna here at Back to the Future Trading. If you're with us today, you're either a curious pilgrim, in which case, welcome, or a loyal supporter, in which case, we love you. Thank you for your support. We bring you these events in an effort to promote ongoing education to both the initiated and non-initiated. And so I'm grateful for this time with you today. Before I forget, let me put on the ultra expensive blue light lens filtering coated reading glasses my doctor says I need to wear now. And things are actually a little bit clearer. So my wife says, don't complain about the headaches if you don't wear the glasses. That woman is a genius. I want to thank you one more time as we go into our webinar. We've got a lot of things to cover here today. Markets are doing some pretty cool stuff. We're going to look at some higher time frame analyses, get a general sense of why the market's been falling. We'll take a look at an equity or two, maybe peek in on some crypto if anyone needs help with that. We'll look at the signals that were published 2 days ago for the most popularly traded markets and see what happened applying a very simple trading system to the predictive times I published 2 days ago. Now I'll repeat that in case you missed it. 2 days ago, we published the times and directions that markets were likely to move. E-mini S&P, Dow, oil, pound dollar, Ethereum, wonderfully liquid and volatile markets. And then we come back together here 2 days later to see what just happened. Not only that, but apply the basic trading rules of a very simple trend system to determine if they were net profitable over the course of a couple days. So that's what we're going to do here today. And I want to thank you again for enduring this experiment. It's pretty cool, and I promise it'll be worth your while when we're all done. We believe that markets are rigged, that the people who run things don't share their toys. They don't play nicely. They never go to jail either when they screw the pooch and take us all down with them. Markets don't go up and down because of anything remotely located in the vicinity of things like value anymore. It doesn't matter how many cars somebody's selling or how many iPads or whatevers are flying off the shelves. It's market manipulation to a large extent. Somebody plants a rumor because they've got a big short position on. A lot of times now the billionaires leak these tweets out into the Twitterverse right when they need to create liquidity for positions, or they'll release a report right when their friends are lining up to purchase shares. It seems like the markets are a Roman Colosseum, a financial orgy here in the throngs of Western civilization's impending death. How's that for gloom and doom going into Christmas? Let me rephrase that. Trading isn't fair, and there's a reason 90% of everyone is losing. It's not something we're supposed to be good at or even allowed to do. So our software looks at patterns in the data. We presume the game is fixed. We presume the house has an advantage at the casino. We start off day one with that belief. We don't believe we can beat Goliath with a rock. Right? These stories we were told when we were kids, boy, it sounds good, right? Don't worry, Iron Man will save us. He'll block the nuclear weapon and the advancing armies of some cosmic dimension. Somebody will help us. Nobody's coming to help us. We're on our own. And if you want to know when the banks are going to screw everybody again, you got to hack your way into the club. We have to intercept their signals. We have to get in front of the move they're about to create. And so we create a tool that interprets the data, that looks at the noise, that looks through the thousands of historical bars and asks a very simple question. Is something happening over and over again at a certain time lately? Is something happening at a certain time enough times lately to throw up a red flag? That's what we do. And so you looking at a screen like this see an area of consolidation, higher highs and lower lows and lower highs and higher lows. But a computer would look at this, a program trained to find those things and say, hey, did you realize that 70% of the last few weeks of 1035s have pushed markets higher? I looked at the last 20 days, Michael, and of the last 20 days, 15 of those days pushed up at 1035. Huh. Well, why is that happening? We're not concerned with the why so much as the what. Is it happening? Is it happening? Anyone who's taken a long enough look, a hard enough look, or a close enough look at markets has determined that markets are not random. They don't just wander where they will and do what they won't. And anyone who's interviewed traders who are successful comes away with the same opinion. And what we do, what I've done since 2008, 2009, is kind of crazy. And here's how the experiment works. Every Tuesday, I update this page, okay? I send out an email with a link to this page. If you're following along at home, I'm about to paste that link into your chat box. If you're watching this later, the page is backtothefuturetrading.com/warp-webinar-forecasts, plural, /. And every Tuesday, I send that link out with the updated forecasts for Wednesday and Thursday. And on Thursday, we come back together to see what happened. So the E-mini S&P, for example, has a time map, a map that we've had since Tuesday. So since Tuesday, this information has been in the public arena, TUES. And so all of Tuesday night goes by, all of Wednesday goes by, all of Wednesday night goes by, and ding, we arrive all of that time later at Thursday. Now, having done this as many years as I have and spoken to as many people like you as I have, I'm familiar with the word fraud. It's very easy for people with small minds to throw words like that around because they don't want to think about this. They don't want to believe that the SEC and the NTFC and the CTFC and the LMNOP aren't looking out for them. They want to believe that everybody plays fair, and there's no way that what I'm proposing to you will work. And so it's easy to pick up a rock and throw it at me online, in a forum, on a post. So to counter that, to expand everyone's minds a little bit, we perform an impossible magic trick. We've had these times since Tuesday, and the software is simply presenting facts. The output is telling us in no uncertain terms that there is evidence, repeated evidence, over and over, so obvious to a program, it's ridiculous frequency of evidence that these times lately have produced down moves. The only reason those times are there, the only reason those blue lines exist, is because an impartial, unemotional, frozen, rock-hard-hearted algorithm discovered them. It keeps happening over and over and over and over again lately. A lot. And the only reason, the absolute only reason these times are here on the bottom of this screen, the white lines, is because that same cold-hearted, unemotional indicator found evidence of up moves lately in this market on this time frame over and over and over and over and over again. And that's it. It's not because of my massive guru-like abilities. It's not because of my proprietary black box, super artificially intelligent, blah, blah, blah. It's because a program designed to look for those times found evidence of those times. Now, the big question mark is, what happened at those times? We're going to take a look at that. We're going to take a look at Wednesday and Thursday of the most popularly traded market, the S&P, in this case, the E-mini, on a 5-minute chart. That's the experiment to see if it worked or if it didn't work. Did it produce a statistically relevant edge? Did the signals help us or hurt us or do nothing of the kind impartially? Did zero with regards to trading? And you'll see, like we see every week, that we've done this for the last 13 years, over 600 webinars, that it did, in fact, help us. Okay. First step. We want to make a distinction between a signal and an actual setup. Many of you have trading systems that you already follow. You're using some other tools, a combination of things. When my volume and my higher time frame and my moving average all do X, I purchase or I sell. This can be added to that as an additional confirmation tool to help you know when to trade. It's raw information. What do I mean by raw information? Well, let's come back over to the webinar on the main page here. And I want you to look at the NASDAQ chart on my screen right here. If we go back and we look at the signals for the E-mini NASDAQ today on a 1-minute chart, we'll see that the times for the end of the session today let's see if I can find it here. Okay, I want to show you what happened. 2 days ago on Tuesday, the software told us to look for an up move at 314 in the NASDAQ. Can everybody see the white dot that I'm circling at 314 today on my screen? Does that color pop off enough? I might need to change it to like a yellow. I was told yellow looks really good. Okay. Can you see 2 days ago on Tuesday how the software told us to look for selling pressure at 331? This is all Eastern time. And what happened at 331? Then we can go back and reference the next time that the software said to look for an up move at 348. And then today, 36 hours later, you can see that 348 pushes up. And then 36 hours later, after the software and the publishing of those times from the software appeared at 4:04, just before the close, that signal appears. So when I say the word signal, I'm referring to this raw information. I'm not mentioning anything about stops or targets or risk or reward, any of those things. I'm just saying, hey, around 314, we were expecting a move up, and the signal produced a move. Around 331, the software predicted a move in the NASDAQ down, and we saw the signal push a move down. Around this time and this time, the very same things happened. And so when I refer to the signals, generally speaking, over the last 13 years, 60 to 70% of the time that we're waiting for a raw signal, that move will generally happen. Okay, so when I'm referring to signals, I'm saying 2/3 of the time to 3/4 of the time, the signal we were waiting for produced the reaction we were expecting. But that's not a setup. That's not a setup. That's a signal. So back on that page where I publish the times in advance, I actually leave a rule set for us to follow. We will be using this book to interpret the signal patterns. We'll also be showing how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. This video provides an overview explanation for these setups. A max 1.5 ATR stop will be used in the setup for the Thursday demonstration. So I'm doing something no other vendor or guru can do, has done, or will do. I'm giving you the signals 2 days in advance. I'm giving you the rules for the trades that will apply to the signals 2 days in advance. And then I'm not saying anything for 2 days. No guru filters, no special third monitor where you can't see my super secret trades. This is it. Okay. What are the setup rules? Well, a signal with trend is based on a trend entry. When a 120 period moving average exponential is rising, I will look for buy signals in the direction of the trend. If everyone is moving up, when we arrive at the buy times, it should be gasoline on the fire. We enter at the close of the time signal candle. Enter at the close, enter at the close, enter at the close. Our stop is 1.5 ATR values away from the candle. Our stop is 1.5 ATR values away from the candle. As the market slows down, the stop squeezes in and gets smaller. As the market speeds up, the stop increases with volatility. That's the great part of a volatility stop. You're not going to always have a 4-tick stop. It might be 6, it might be 12. The reward also expands as the volatility expands. We exit by the next signal. We exit by the time of the next signal. This is called a signal with trend. Signal with trend. Now, there's a variation of this. It's called a crossover trade. If your signal starts out below the moving average and it crosses over the moving average, now it's a trend trade. We enter at the close of the candle. Our stop is 1 tick under the low of the candle, or the high if it closes below from above. And then we exit by the next signal. So one of the differentiating factors here is our exit is based on a time. So when you're sitting staring at your screen going, when do I get out? 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 Can I get out here? Should I get out now? Should I get out here? 157 is my exit. I have a reason to get out at a certain time. I don't have to shoulder the burden of that stress. That window of time exists because it keeps happening lately over and over and over again. And you don't know it because you're a human being and you're not designed to see it. But the banks keep doing it because they know you'll never believe it's happening until I come along. There's another variation, pardon me. There's another variation, the other setup that I mentioned, called a puncture trade. If we're looking for signals in the direction of the trend, this is a breakout. This is a breakout trade. Here's a counter trend signal at 9:30. We're expecting the market to do this. That's what they almost always usually do. That is the established pattern. Well, Steve, what happens when they keep creeping up and creeping up and creeping up? What happens is the thing they used to do, they're not doing it. They're not doing it. So as a buyer, as I'm looking for moves up, the one thing I don't want is selling. And if the time people normally sell isn't producing a down move, Dorian, there's a pretty good idea circulating in my head. Hey, they're not selling right now. They know something. Something's changed. They're not doing the thing they almost always do. And so what I'll do is I'll draw a line in the sand right at the stop of that 9:30 candle. And as soon as it punctures that line, and they break through it, I put my stop underneath the candle that punctured that line. Kind of like stabbing a tire with a knife. I put my stop above the handle of the knife as it sticks into the rubber. Very violent examples in these webinars lately. And then I hold it until 9:48, until the next time. That's when I get out. Everything's based on time. I know, it's crazy, right? Okay. So what does that look like in our universe? Hallelujah. Hallelujah. Let's make it even simpler for them, Michael. We'll just show the Kumasiyamas. No advanced patterns. Okay, ready? Normal draw mode, please. From the Euro to the US session. At 5:10 this morning, using the times that we've had, the candle comes, and right here, it punctures the line. We put our stop right above it. It comes down, moves back up, and hits the stop. First trade of the Euro session. We enter at the break. We exit when it hits the stop, -1 point. The next time it punctures the line, it comes up, and then it goes through right here. This is a puncture. Let's write the word down. It punches through that white line. We're in it. When it goes into that level again, boom. And now we hold on until what? The close of the next signal. Positive $2.25. So there are two puncture opportunities. There's one here and one over here, just like the rules I gave you before the webinar. Now, 8:10, we are below the moving average, which is dropping. It is a sell signal, which matches the times that were published since Tuesday. And look at what the banks do. They go up 1 candle, 2 candle, 3 candle. They pull right back up into that move. Steve, it's like they're standing on a diving board. Right? Doesn't it kind of look a little bit like right here? They climb higher, they climb higher, they climb higher. And then at 8:10, beep, beep, beep. And now they drop. Boom. How long do we hold the trade? Do we get out here? No. Do we get out here? No. Wow, it's starting to consolidate. What do I do? It's not 10 o'clock yet. How long is the window? The window is until 10 o'clock. And I hold it, and I hold it, and look, that big white candle at 10 o'clock. Boom. That's when I get out. From here to here. It's a $40 move. How many of you get in these trades and then you kick yourself in the keister? Oh, I left so much money on the table. It's designed to do that. This section here was designed to shake you out. It was designed to shake you out, right? Those of you that have the software, I want to show you a quick trick so you learn something while you're here today. There's a law that we apply from our force training that allows us to take any big time gaps and split them into thirds. I show this occasionally on the webinars on Thursday. One thing you can do is you can go into your Fibonacci time extension tool. So Stephen, you can change your levels to 0, 100, 33, and 66. And if you have a large gap of time, you can actually subdivide the cycle into thirds. And we expect, Stephen, the buyers to come in here where they start to go sideways. And then, Stephen, I expect that down move to continue on the second third. Does that make sense, brother? Hey, Earl. So for those of you that are cautious of large swaths of time like that, you can actually use this slide ruler of sorts, this institutional slide ruler, to see when the selling or buying will be kicking in midstream. That's a nice little advanced technique if you've already got the software. Well, 10 o'clock comes along, and we have an opportunity for another puncture trade. And right here, it misses our line by 1 tick. But right here, that candle crosses the threshold, that 1.5 ATR threshold. So now our stop goes where? Just above that candle. Our entry is right here. Our exit is the next time, 10:45, $9.50. 10:45 is a signal with trend. We're going to go short here. Close of the candle. We're going to exit by the close of the 11:20 candle. We made a whopping 1.75 points. 11:20 comes, we're watching this line. They don't go through it. They don't go through it. And then we have a little 5-minute wiggle waggle here. And we lose money because it closes 5 minutes higher than it opened. Boom. We lose $2.50. So this is a signal with trend right here. Let's be consistent and come get some nomenclature. So I'll just type SWT. Whoops. SWT. 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 Then there's one more over here. Okay, now 11:55. Guess what? It's another puncture. It can't possibly go any lower, can it? Oh boy. It sure can. Right there. We breach it. We puncture the tire with a knife. The stop goes above the handle of the knife. Market's bleeding. It's leaking. Ah, how long do we hold it? Until the close of the 1240 candle. Right here. $9.75. We entered the signal with trend at 1240. We exit. Whoa. We made a whole tick. Ha ha ha. Lords of the universe with our tick. 1 o'clock comes. It's 1 bar off from the low right here where it kicks in. So we got a puncture. Where's our stop? Right above that candle. How far does it go in our direction right away? Well, it goes $9 or $450 in our direction. Okay, my rule for break even in the demos is 500. We didn't get there, so I have to log a $2 loss. 145 signal with trend. 2 days after the signals were published, we enter at the close, we exit at the close, $3.50. Now, quick survey among friends. What happened at 2 o'clock today? And what was predicted to happen today at 2 o'clock? Right there. That's a buying time. And how long was that buying move supposed to last, Stanley? Until 3:35. Huh. What does it do from 2 o'clock to 3:35? Fascinating. Isn't this fascinating? So it's 2000, somewhere along the lines of what? 2009, 11, 20, another 23 points, close to $3,000 at that point on day 2. If we come and go back and look at what happened yesterday, I want you to start to see that the same thing was happening, right? We started our test today at 8 o'clock. If you keep track of yesterday, buy at the close, stopped out, -6. Buy at the close at 10 o'clock. The high of day is 11.10. It's a $32 move. So before 11 o'clock both days, the ES moved $30 and $40 respectively at the times you were made aware of with a crazy email. Then we gave a little bit back right here. We made a little bit back right there, a whopping quarter. Then we gave a little bit back right here. So let's add it up real quick, right? 32, 29, 23, let's call it 15 points yesterday. 15 times 50 is what? let's call it $600 yesterday, and then we'll call it $3,000 today. You know what? Let's even be more discriminating. We'll say yesterday was 600, today was 2,500. We'll just account for commissions and slippage and all that fun stuff. That means using software whose times were predicted since Tuesday across the sessions here, we're more profitable than not. This happens in other markets, by the way. Can you see if we applied that same technique to crude futures today, what would have happened? If you were an oil trader, could you have made money selling at the blue dots below the moving average and buying at the white dots above the moving average? Huh. Where else did it work? Well, we looked at the NASDAQ together today. How many of you looking at this chart can tell me with a straight face that the market is random and all you need is a moving average? When you look at the times where things were expected and you see what physically happened at those times, 1 o'clock, 1:25, 1:41, 1:54, 2:12, 2:30, 2:52, 3:14, and 3:48, even 4:15 at the close. Please explain to me. When I get messages from people online and they say, oh, your software is too expensive. It's too expensive. Why can't it cost $5 like this other tool that I bought that doesn't work? Why can't it cost $100 like this system I'm following where I've lost $30, $40, $50,000? This is Apple on a daily time frame. I've been showing this chart for months. Months. I leave these times hanging out in the future. I warned you about the up move on October 3rd. The software warned us about the up move. Those of you with 9-to-5 jobs, the up move at 10:13. I told you it was going down on October 27th until November 8th. I warned you about the next signals with trend on October 18th and this big one right here on December 13th. I warned all of you. It's too expensive. And Apple has dropped $16. That's 10%. 10% drop from a prediction that's months old. The times are sitting out here in the future. What's going on here? What's going on? What's going on is they want you to believe that these things are random. And they're not. They had a plan. They had a huge plan. What was the question? Can you look at a pound dollar hourly chart? Yeah, we can look at a pound dollar hourly chart for sure. Stand by. Any other questions about that while I'm loading this up? Pound dollar 1 hour. Is it doing the same thing that the NASDAQ was doing on a 1-minute chart a second ago? Yeah. Well, where could we have sold this then? Well, there's a puncture right here. There's a signal with trend right here. There's a signal with trend right here. There's a signal with trend right here. So Obaid, you would have been short from here to here, short from here to here, short from here to here, and then short from here to here, and you're short now and break even. You would have been long from here to here, stopped out twice here, you would have been long from here to here and long from there to there. Well, babe, tell me more about your 9-to-5 job. It doesn't matter. There is no time frame the signal works best with. Stanley, what time frame do fibs work better on? Think of it that way. Does the 50% and 62% retracement work best on a 1-minute chart or a 1-hour chart? It works equally well because it's based on a natural principle. Time signals are based on a natural principle. So if we come, I'm not the David Blaine of trading. Don't be silly. I'm just telling people what the truth is. I'm explaining what we all know. The truth is, the game's not fair. The truth is, they're screwing us. And I have the courage to stand here, maybe it's courage, audacity, I don't know, stupidity, to tell you that it's happening. It's happening. Okay. ES, S&P on a daily chart. Bear with me as I draw some lines here using that method that I just told you about. Okay, from here to here, from here to here, and then from here to here. And stand by. Yes. Okay. So on the ES, I'm going to fill in the spots that we were waiting for those things. I'm going to fill in these spots. And there we go. And that's pattern 4. That's pattern 5. That's pattern 8. That's a pattern 5. That was almost a pattern 5. And that is a pattern 2. Right now, on our E-mini S&P chart, we are down until December 27th. So if we spread this out and we see when the next signal is coming, I can put a vertical line right here. Luke, that's a method from Force that we're using in today's class. Yes. For those of you that want to know what these pattern numbers are, there's a booklet in your handout section that you can reference to see why I'm drawing those numbers where they are and why the arrows are where they are. So if I was the bank, Stephen, Stanley, and I wanted to create panic in the market before this buy signal, what would I do if I was Goldman or JP Morgan? Would I potentially want to run this stop right here? Could I potentially come here and do this and trip out these stops just before New Year's? Bad news, Russia launches a fart bomb on Uzbekistan. Something happens that they blame it on. And right here, they run the stop just before or on the 27th. What happens then? Everyone panics and sells because we broke through the low. And then what does it do? It reverses and comes back above. So now everyone's stops are hit. It keeps moving above, and now everyone gets long. And now what does it start to do? News reports come out. They found gold bars under the White House. Joe Biden is vomiting platinum. They're storing it in bars under Fort Knox. There's a lithium reserve under a Chick-fil-A in Kentucky. Some bogus news comes out, and all of a sudden it's rip-roaring in the other direction. Right? This is how I view the markets. The same way we viewed them with Apple and oil in the S&P, as well as the pound dollar. It's always the same thing. They always do the same thing. They blame it on something else. They blame it on something else. Any questions about that so far? So when we come to this webinar, it's very important to me that you understand, I understand what trading is. Trading is exploiting a statistical edge over time. You will have winning streaks, you will have losing streaks, you will have plateaus. You will have plateaus in your equity curve. You will not have 100% winners like my Facebook ads promise me. I want an edge where I make more money than I lose over time. So over the 2 days that we've examined this, we've sort of defined that edge exists using a tool where you know the trades are coming in the future. Do you understand how important that is to your psychology? To know in the future when the trade is coming? There's a guy on YouTube, and I watch his videos. And he has a whole YouTube channel, Tom, where he records his wife being scared when he sneaks up behind her and goes, boo. And it happens all the time. Volume 15, there's a series. I have a confession to make. I used to do this to my wife when she'd go to the bathroom. She'd pull the pocket door closed, and I would stand up right by the door. And Earl, as she would go to come out and swing the door away, my face was right there. And she would jump. Ah! It worked. And now it doesn't. Because she knows that's what I do. And I gave up doing it because it doesn't work anymore. When you know when the trade is coming, you don't fall for stop runs anymore. You go, oh, I see what you're doing. You're not sitting there bar after bar after bar bored because you got to trade. I'm sitting here. I'm not doing anything. I watched my father-in-law lose $7,500 because he was bored. Did you follow the rules? No. Okay. I was just sitting there watching it go up and up and up. Did it give you the pullback signal? No. You get bored. You do stupid things. Knowing the times in advance keep you from doing stupid things. You know in the future when they're coming. And that's what trading is about. It's not about what your volume said it did a second ago. It's not about where your moving average is right now. It's not about what your candle pattern is. That happened. It's in the past. The moment you see it and recognize it, it's in the past. And these guys, their algorithms, their trading systems, their psychology divisions design these setups to lure you in the same way a casino lures you in. Ah, it's very comfortable in here. Free drinks, scantily clad people of the opposite sex, the promise of fortune. I shall stay here forever. Banks do the same thing. And so we're the only indicator, as far as I can tell, the only tool, the only company that believes Trading is about estimating what the future holds. Back to the future trading. That's what we believe. So you want to be proactive, not reactive. Proactive, not reactive. So another way that I demonstrate this, as many of you know, we're engineers. We're an engineering company. Our backgrounds are engineering. And we built different tools with varying degrees of accuracy. The most prominent program is the one that I'm showing you here today, a program called TachEon Warp. And then we made a plugin for it that I don't want to go into too much detail about today. It's something you can always add on later. But we used Aurora to plug into the signals and test them. We basically built a little strategy analyzer and said, what happens over a broader period of time? What happens over a broader period of time beyond the webinar, right? So we knew from customer back tests and from our experience over hundreds and hundreds and hundreds of examples that the model had a positive expectancy. Right? We knew this for years and years and years. But I wanted to show you what a simple plugin can tell us about the software. And so I loaded up signals on an E-mini S&P chart today for us to look at. Where is that sucker? Well, that's kind of anticlimactic. Is it still here? No. All right, I'm going to reload this for you then. Let me close this workspace. If you'll bear with me 1 second. I want you to see this work. And I think GoToMeeting locked up my computer. All right. Bear with me 1 second. I think this is worth the wait. This is unanticipated, but that's life lately. All right. Make sure that's closed. I flew too close to the sun, but I'm coming back. Stand by. Stanley wrote something I want to show you while we're waiting for that to load up. One of our customers here today. There we go. One of our customers just wrote this today. Stanley, I'm going to share it with the group while that's loading up. Using your system, I easily recovered the initial cost before the credit card bill was due. Listening to your strategies and reprogramming myself to think like a banker is where I've been making the real money. Stanley is not an employee of this company, nor is he affiliated with us. It's a real person with a real credit card and a real experience. So right now, this software is going back and testing one of the time signals. I had an idea that I could use a plugin like Aurora and test the time signals from the open to the close every 15 minutes. 9:30 to 9:45, 9:45 to 10 o'clock, 10 o'clock to 10:15, 10:15 to 10:30, and so on. And so today I just wanted to show you what would happen if we just took one trade in the first 15 minutes between 9:30 and 9:45. So in terms of opportunities, there could be a signal at 9:33, 9:36, 9:39, 9:42, or 9:45. So Earl, it could be any one of those, also 9:30, right? any one of those bars could produce a signal. And so the software right here is showing me the starting date, 12/29/2021. So, Obaid, that's a year ago. And so when I got that information, I plugged it in to this spreadsheet. And I want you to see 12/29/2021, 936, 933, 939, 939, 933. And I did that for an entire year up until today. So Stanley, 15 minutes a day, one trade a day. The software showed, obviously without commissions or slippage, it's at a peak of 800 ticks. 800 ticks times 12.50 a tick, right? Let's do the math together. 800 times 12.5. That's $10,000 divided by 12 months in a year. It's $833 per month. Let's take 80% of that for slippage and commissions potentially. It's the devil's number of profit. Boogity, 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 boogity. It's $600 plus a month, 15 minutes a day. You see what I'm hinting at? I went back and I started to add more 15-minute signals to the chart and look for other windows of time. This is the last 6 months trading 9:30 to 9:45, 11:30 to 11:45, and 3:45 to 4 o'clock. That one started in March, and that test when I ran it was in September, March, April, May, June, July, August, September. So that was 6 months, and that was 1,300 ticks in 6 months with 45 minutes a day. 1,300 times 12.50 in 6 months divided by 6 was $2,000 a month. Nearly 3, trading 45 minutes a day. No, Obaid, I don't demonstrate that here. There's a pretty good video about that on the page. But Dave can talk to you more about that if you want when he gets in touch with you. So the model has a positive advantage, right? It has a positive expectancy. I can ask the program, hey, would you please go back for me and test every time it does a signal with trend, every time it does a puncture, every time it does another signal with trend. And then I can actually output that information and show you guys that it works, that there is a positive expectancy, right? The same way when we were looking at the E-mini S&P 5-minute signals and 3-minute signals and the pound dollar signals today and all that stuff, the Apple signals, it all has a positive expectancy. And so I'm kind of happy to be able to show you that here today. The reality of our world is that these guys cheat. Any questions about what I've been able to do here today? Because it's no small feat. I already have the times for tomorrow, yeah. And that's the thing I want you to leave here with, remembering. When you wake up tomorrow, all of these signals to the right of this white line are already carved in stone. I already have for the Asian session. I already have for the London session. I already have it for the US session. I'm the only company in the world that's telling you when these trades are coming in the future. And you can have them. They are available. It's not as though there's some secret satanic ritual you need to participate in, some college hazing. It's available. It's a transactionable thing. You can have it. You can buy a gallon of milk, you can buy a loaf of bread, you can buy a TV, you can buy this indicator and have the information. It is available. And that is good news. Oh, happy day. Oh, happy day. Oh, happy day. It's available. And here's the best part. You don't even really have to trust me. Other people have gone out before you and done the analysis. Right? Other people have gone out and done the analysis. They've already gone through the process. They've gone through the training. They said, hey, look, I did it. It works. These are good people. If you're interested in reading more about the experiences of the people that have gone before you, please look in your GoToWebinar chat box. If you're watching from home, trustpilot.com/review/backtothefuturetrading.com. These are real people with real credit card receipts that don't work for me. And that's the end of my spiel. The information is available. You can have it. The trades, for the most part, are going to do what they did today, tomorrow. It might be up, it might be down, it might be sideways, but most of the time, if history is any indication, it's going to go up and down at the times the banks want them to. Know when in the future. This is the future. Stop trading with grandpa's indicators. Doesn't work anymore because the world's not fair. I'm trying to teach my daughter in college. She's studying astrophysics and astronomy. And the proportion of male to female students is somewhere on the order of 10 to 1. She said, Dad, I had this guy, I found out he cheated on the test. He used my answers. He was looking right at my paper. Dad, this guy copied my lab results. He was sitting there looking right at me. Dad, my lab partner threw me under the bus. He said the bad findings were my fault and not his because he didn't do the project. Yeah, life's not fair. Have you been watching TV? This happens every day. Here's what you do. Don't trust anybody. You trust me, you trust your mother, you trust your brothers, and the dog. That's it. Maybe grandma. On a good day. Don't trust anyone else. Everyone is trying to take what you have and make it their own. That is the lesson I want my kids to learn. They will be successful because of it. They understand how the world works. This is how most of you without the software trade. My volume says you should go up now. My moving average crossed. Why aren't you dropping? My order flow analysis said there was a big block order right here. This is supposed to be a very strong support and resistance level. Urgh. Yeah, I don't care about any of that. This is how our customers trade. We get behind the banks when they move. When the behavior pattern swings around again and that window opens up, very calm, serene. If the order is working and it's growing and the account is growing and it's green and it's getting bigger and bigger, leave it. If it's dinking around and not working and it's in the red and in the green and in the red a little bit, close it. Wait for the next time. And then you get that 8 o'clock, 8:30 signal, $10, $20, $30, $40. Woo! Here we go. Yeah. I want to be part of your team. I've been a member of our customers' teams now for 13 years. You don't last in this industry if what you build doesn't work. You go out there on the battlefield every day. We know how to support you. We know how to equip you. We know how to challenge your techniques and make you better at what you do. We are reliable. We're consistent. We're knowledgeable. And we're focused on your profits. I want to be a part of your team. But I want you to remember this. If you leave without the tool today, and there's a promo code coming in 30 seconds, this is the world. You win battles by knowing the enemy's timing and using a timing which the enemy does not expect. You know what they don't expect? They don't expect you to do what they're about to do. They expect you to believe the stop run is a breakout. They expect you to overtrade. They expect you to move your stops and shorten your targets. They do not expect you to go long when they go long and exit when they exit. They do not expect you to sit through the chop in the middle of that time window confidently eating your peanut butter and Nutella sandwich as you look over at your calico cat and go, you're so calm. Why is he so calm? Because he has the software. That's how you win the battles. This is a centuries-old methodology. It's still working. Study your enemy. Move when they move. Sit when they stop. Know what they're going to do before they do it. Michael, how do I get your awesome program and use it for myself? I'm glad you asked. In your GoToWebinar chat box, there's all these people in my office today. You'll see a link. This is the traditional clicking of the link. At the bottom of the TachEon TimeWarp page is an orange Buy Now button. When you click on it, you will see an annoying pop-up. We have a live trading room that meets Tuesday, Wednesday, Thursday, every week. And we show entries and exits in the most popular futures markets available. We do longer term analyses for bigger movements if you're an options trader or you're taking swing trades. We show those setups from 8 o'clock to 12 o'clock, Tuesday, Wednesday, Thursday, 12 times a month. When you buy that with your software, it's 25% off if you start out with it. Do you need it forever? No. If you want to learn as quickly as you can in the shortest period of time possible, it might be something you want to consider, especially if you like having your hand held as you're learning. Okay? If you don't want it, you don't need it. Click on the blue go to checkout without it if you don't need it. Big purchase agreement. Wow! Down here is a place if I can type for you to put a promo code because it's Christmas and that's what we're supposed to do. Your promo code today, which expires in a week, is WA, all capital letters, RP750. When you put that in here and hit apply, it will take $750 off this price. That happens once a year, and then it's going to go back to the normal price. Ding. This is your chance to get on the train before it chuggas away into 2023. And I can guarantee you, based on the analyses I'm seeing and the things that I'm anticipating in the very near future, a move like today is just the beginning of what we're about to see. Those of you that lived through 2008 and 2009, you remember it wasn't unusual for a 40, 50 point move with a 5-tick stop. The best opportunities for trading with this program are just around the corner. If you want to walk into that tumultuous nightmare, the Ukrainian global depression, God knows, COVID, Chinese crematorium, whatever the news is saying, election cycle without this tool, you might as well roll dice. Odds I'll buy, sell if it's even, and you'll probably do better. Now is your chance. This works on Ninjatrader 8. You get 2 computer licenses, lifetime updates, free video archive training. You get free white glove installation to make sure it's installed and running quickly, and our undying gratitude as an American-based company supported by and founded by engineers, not gurus with a marketing degree, engineers. And in the famous words of Mr. Forrest of Gump, that's all I have to say about that. Any questions? Time to turn your life around. If you get a phone call from a guy named David, works with us, he's awesome. He is the wise old sage. Maybe not old. The wise older sage who helps people onboard. He'll help you get your transactions sorted, make sure everything lines up. If you need help getting on board, he'll find a way to make it happen for you. So please take his calls, respond to his emails. He's on your side. He's working with us. And it would mean a lot if you could just hear him out. All right. The rest of you, I hope you learned a little bit. Yeah, I didn't mean that. I keep saying it, but I didn't mean it. I'm sorry, Dave. The rest of you, thank you for your support this year. We continue to improve, make updates, make improvements, hold more training events. We are investing into you because you're so good about forwarding referrals to us. Most of our sales come from word of mouth marketing. So if there's someone who's interested, you think, who could use a little nudge in the right direction and you're doing great, please send them our way like you always have. We're very grateful for that. Happy holidays to all of you who support and believe in those things. Happy winter solstice. The days are getting longer. It was getting hard there for a while for me, the darkness. I'm not a good dark guy. I like light. I feel like Superman when the sun's shining. And so we've got that coming our way. May the wind be at your back. May the sun shine gloriously upon your beautiful and handsome faces today, tomorrow. May the valleys of adversity rise up to meet you along your path. And may the mountains lay low and flat and firm below your confident feet as we walk into a new year together. Fear not, be not dismayed. We're a small but mighty weird tribe, family, call it what you will. For 13 years, we've been making it happen. I believe this year will be one of our best yet. So stay tuned, keep coming, tell your friends. We love you. Thank you so much. Check out our YouTube channel for the recording of this video. It'll be up in about an hour or so. Share it with people that you know and continue to come back. Even if you never buy, we'd love to have you here. At least you're not listening to someone else's junk. Congratulations to those of you signing up here tonight. We look forward to getting you installed and getting you started. And remember, market you trade is not random. It's all about time. And now's the time to get started. Take care. Good night. We'll see you soon. Bye-bye.